Let's get out to Viktor Katona, lead crude analyst from Kpler. Great to have you with us. Let's just start with the oil price and the fact that we've basically dropped so much over the last couple of months and we're back to pre-Ukraine-Russia war levels. What do you point that down to? It just seems quite remarkable if you zoom out, given how much we spiked up and how much we've come down since the inception of that war.
Yeah, absolutely. It's mostly demand and fears that the recession will impact demand quite strongly. Basically, with every single piece of data that comes in, and mostly those data points are negative recently. People are starting to lose faith in the strength of demand that we have been seeing over the course of the post-pandemic recovery, and that is the leading narrative. Be it coming from inflation or just weak macroeconomic data, the fears are out there, and the bears are very much rampant right now in the market. So that's it, mostly.
Interesting that the demand concerns are outweighing what's been happening on the supply side of things. How much do you think, in what proportion of the pullback do you think can be attributed to just wrong way positioning? People got so bullish when the price of oil was high that they were caught the wrong way around when it started to turn.
Absolutely. I mean, mostly, it's the bias of the given moment. When everything seems just to be ideal, you think that this is going to last longer than it would. People naturally assume that, for instance, even the summer months would be very, very strong. We're in mid-August. Technically, we're still summer. If you were to ask someone 2 or 3 months ago, how would mid-August look like? I bet you that most people would actually say that we would be firmly in triple-digit territory on a per barrel basis, that demand will be very strong and basically there will be very little to fear. Right now, it's a completely different picture. Supply is stagnant. OPEC Plus is a perfect example of why supply is stagnant. Demand, with every single day, our hopes that demand would be as strong as it was in the first half of 2021 are waning, and there's very little to give us hope. To give hope to the bulls that oil price is gonna go back beyond $100 per barrel or higher.
And what's interesting is obviously President Biden made that trip all the way over to Saudi Arabia. He went around the region, and on the back of that, we did see a marginal, very symbolic increase of 100,000 barrels per day. It really isn't that much to talk about. But the irony of all of this is if OPEC Plus had actually increased more, we would be in a worse situation right now. So in a sense, do you think OPEC Plus were vindicated in terms of how much supply they were producing when there was so much pressure on them to do more?
Yes, all the OPEC heavy hitters, OPEC Plus heavy hitters, they know that caution pays off in the long term. It might not pay off in the short term. There might be some missing thousands or millions or billions of dollars that you miss. But over the long term, caution is what brings you to an ultimate victory. We have been seeing that OPEC Plus is very cautious with the supply. We believe that Saudi Arabia could be producing more than it does. But seeing levels, price levels that we see right now, we very much doubt that it would do so. Most of the stories that are pulling out, saying that they have the spare capacity, is just for people to know that there's spare capacity. But the market narrative to actually bring that spare capacity into a waning market is actually very little. And effectively, there's just Saudi Arabia and the UAE, which can produce that incremental barrel. Everyone else is producing at their maximum. So very much a stagnation and a lack of willingness to do something more into a market which is already seemingly oversupplied.
So is that how you interpret the chief executive of Aramco, Amin Nasser's comments over the weekend? I thought it was interesting that he said they could ramp up supply to 12 million barrels per day. Is that just his way of telling the market, look, we do have more capacity, but we don't really want to use it just yet?
I think there was a very important caveat when he said that. He said that they would bring additional production into the market if the ministries and basically if the kingdom top officials decided that this would be the best way to take. Now that's quite the caveat, because under current circumstances, I don't think they would decide that this is the best path forward. So they are saying that they have the spare capacity, but it always comes with a caveat why it's not going to be used at this particular stage.
Well, just to round up our discussion, our colleague Hadley Gamble is going to be speaking with the new Secretary General of OPEC in about half an hour's time. So we're really looking forward to that interview. What do you think is going to be the biggest challenge ahead for the new Secretary General?
I think the biggest challenge will be to maintaining the pact as it is, primarily because the European sanctions against Russia will be kicking in late 22, early 23. And somehow the cohesion between the oil group has to be maintained. And at this point, even though Russian production was still very strong, but most analysts are anticipating some sort of a decline. If OPEC Plus wants to remain as it is, it has to be okay with Russian production being lower than it currently is. If they can maintain this, if Russia is not a thorn, then basically they can move forward. They need to be more flexible in how they perceive their own roles within that hierarchical structure. So maintaining cohesion, I think, is very much top on the list.
Yeah, absolutely. It's going to be a really difficult job, especially when Russia obviously are part of the OPEC cartel. Viktor Katona, lead crude analyst from Kpler, thank you so much for joining Street Signs today.